Hi traders, this is Forex Nelson and I'm back again today with another training video for my Super Sniper trading system. Today's date is April the 16th and this video will be called How to Trade the Goal Line. The video will be about 30 minutes long. So the goal line, the one I'm talking about, is the one on top here. It is a 50 EMA, and of course we have the 20 and the 30, the other two here. So I'll be showing you plenty of trade examples, Forex pairs, and of course I'll be showing you the futures. The concept of the idea is quite simple. We want to see the goal line going down, and we want to see the AO below the water line here. So once we establish the fact that it qualifies for a great way to trade, and don't forget, you have to do a daily trade plan. And that's these arrows will remind me this is for London and this is for New York. And of course, if I was doing Asian, not a big deal. I would pop in an arrow to remind me to sell. And these are all very good examples. So all the way through here, including all the way from back here, every time price action comes back to the moving averages or the T area, this is your entry anywhere between this moving average and this moving average. You get in. That London move is 115 pips. This Asian move is 61. Remember, your stop is always on the other side of the goal line. That's 10 pips. And then, of course, either here or here you're in. Stop is, look at that, only 4 pips. This London move produced 80. Wait for the pullback. Remember, it's always wait for the pullback. Wait for the pullback. That's the magic word, and the golden rule is take the trade as close to the goal line as possible. The closer the better, and your stop will be the smallest. Look, 5 pips. And it did bottom out here at 65. Excellent return. So remember, every time it comes back to the moving averages, whether it's here, 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 or here, pull the trigger. Moving on to another example, the Euro CAD. Now the moving averages are braided, but you're looking for them to start separating and looking good, exactly like this. Goal line going down, everything qualifies for a great way to trade. You must wait for the pullback. Now in real time, you can take it here, here, here. There's no right or wrong, as you know where your stop is going. Look at that, 10 pips, risking 10 to get 60. Now, of course, it's always best to take the trade within the first 1 to 3 hours when the market is open. Now, when it comes back here, it's more risky, mainly because it's later on in the day. It's lunchtime, after the London close. This is the London close. That's your signal to buy. Get in. Stop is 11 pips, and your target is always the goal line. 38 pips, 40 pips. You have to think of the goal line. And it's not a big deal whether it's a 30, 40, 50. Goal line is the goal line. Price always comes back to it. You have to think of it like a very powerful magnet. Every day hits it many, many times. Over and over and over. Okay, let's move on to the next pair, Euro Yen. Moving averages are braided. They're separating, diverging, and looking fantastic. everything qualifies for a great way to trade. And from the London, wait for the pullback. That's the magic word. If you get in, let's say here, that's your stop, 6 pips. To the top up there is 117. And of course, I'm up at 6 in the morning doing my trade plan. Must wait for the pullback. It happens every day. Every day. Comes back to the moving averages. Let's say you pull the trigger here or here. Not a big deal. Stop has to go there. Look at that. Again, 10 pips. Not too much to get almost 100. Excellent return. And that's exactly nice, smooth move going up. And of course, in real time, you don't know. It could break, like continue up and break the top. So if you pull the trigger around here, now that's like 22 pips, but it still gave you almost 30 pips. Still a winner no matter how you look at it. Keep in mind you have to have trade management and money management in order. Moving on to the Euro New Zealand. Run a check here, price actions below the goal line. Remember, once you get above the goal line, we're thinking about buying, especially when we go above the waterline on the AO. So for myself, the daily trade plan, I must wait. Now, if I bought it here, and I'm sure you've done that many times too, I know and realize the fact that it can come back to the goal line. And all of a sudden I'm down, 43 pips. So why don't you just measure from there to the goal line? And if it doesn't bother you to be down 40 or 50 pips, take the trade. Because we know it's going to go up according to our daily trade plan. Once it gets you know where your stop is. So let's say you get in here. There's your stop, 12 pips. Risking 12 to get well over 100. And if you look straight down at the bottom here, when you're pulling the trigger, the TZ is at the bottom working its way up and we're getting blue. It's the beginning of the next cycle. Remember, buy low, you're selling high. Buy low, sell high. But depending on where you are, from here to 10 o'clock, well, what time is that? 11:30, London close, about. So the biggest move is at the beginning, and then it flattens out. And of course, what are you doing here at the goal line? What did I say? Wait for the pullback. TZ is at the bottom. Buy signals, well, starting. Goal line, you want it to break the top, but if it doesn't, well, what's wrong with 40 pips? Nothing whatsoever. Remember, the charts have to look nice and smooth, not braided, either going up or down. Here we go, euro dollar, nothing changes. They're a little bit pinched here, but still good. Starting to diverge, looking better. Here's the pullback, that's the magic word. TZ shows you the pullback, and that's your buy signal right there. Get in, you know where your stop is, 17 pips. You're risking 17 with a potential 140. Not too bad at all. Like I would be getting out over here. I wouldn't be bothering with this other stuff. Let's move on to the pound pairs now. Pound Aussie. Nothing changes. Moving averages are starting to look good here. This is your London, bit of a push. Actually, it goes all the way up to here because the London closes right here from 3 to 11 a.m. New York time. Here's your pullback. I put in 2 arrows here, mainly because this is where the area that I'm thinking about pulling the trigger. If I do it here, stop. Well, the thing is, every once in a while, this happens. But it only went 14 pips. And, I don't do a 6 pip stop. my auto stop right over here is 30. There it is right there. And well, I set it at 100 pips because sometimes I trade the news. Put in the order, it adjusts it automatically. And in case the news kicks in and shoots, well, if I get 100 pips, I would be happy with that. As long as everything is looking good, qualifies for a great way to trade. You're in the trade, risking 15, and look at that, 67. Somewhere across the top here, especially when the TZ is at the top, and you get a sell signal. Always wait, because you can, if you wait a little bit, you can get another 20 pips after the sell signal. And of course, nothing changes. Come back near the goal line, buy. Here, buy. I wouldn't recommend here. Wait a minute after 5 p.m. New York time, a minute or two, because at this point you have to start dealing with swap rates. And that's where the broker is going to charge you money. Once in a while, they actually pay you, but pay you very little, and they're going to take like 3 times more from you. So you have a Word document called swap rates, and it'll show you and explain, some of the rates. But when it does come back around this area, stop is within 10 pips, producing 30. Excellent return. Moving right along, pound CAD, nothing changes. Moving averages are starting to separate. There's your pullback, get in. 10 pip stop, London produced 60 pips approximately. That would be exactly the same for the New York. And here's the arrows, all of these candles, including these two. If you want to take the trade here, you're risking 12 to get 25. If you want to do it again, but I'm not trading at 1 o'clock in the afternoon, because this could go flat or it could keep going up, so you got to be careful. Moving right along to another pound pair, pound Swiss. When you look at 21 instruments, you're going to get a lot that look exactly like this. That's why I love using the Super Scalper trading system. London push, pull back to the moving averages, sell. Almost 50 pips with a 10 pip stop. If you pull the trigger around here, another 10 pip stop to get around 35. Not too bad. Moving on to the pound yen. Really like trading this pair. Very predictable. My daily trade plan says to buy. Let's say 4 hours daily. This arrow would be right here. So once it breaks above and comes back and kisses it here, or when it comes back and right about here, that's good enough. Just measure your stop. Can you live with a 10 pip stop? If the answer is yes, everything else looks good, qualifies for a great way to trade. And by the way, this is Asian here. I just wanted to show you. As I remember some traders saying, "Oh, don't trade Asian. You can't make anything." Well, I don't know about you. 100 pips, one standard lot. It's over 100 pips. What's wrong with a quick $1,000 before you go to bed? And this is exactly how you would trade with a day job. Because it could continue to break the top and keep going up. And by the time you wake up in the morning, guess what? You've got a whole bunch of pips. 85. Well, not too bad. With 0 possibilities of having a loser. Let's check out the pound New Zealand. Every day you're going to see the same thing. I would have this arrow over here. Your first buy signal down here at the bottom, blue, blue, blue. TZ is going up. We're above the water line. Goal line is going up, especially by the time you get over here. There's your pullback. Sometimes you have to wait a little bit, to wait for the pullback. Get in at the goal line approximately with a 10 pip stop. You're risking 10 to get almost 90. Very, very good return. Let's see now. Also, as it's going up, keep an eye on the meter here. The pound, more than likely, will be a bus driver. In other words, 80% or more. Once you get more than 100 pips within the blue box, you're going to have at least one bus driver. And let's say pound was 85, New Zealand's 22. This is the kind of effect you're going to get. It's going to go up. And then, of course, nothing changes. Get in front of the computer anytime after 5. And then at 7 right here, Asian market is open. Then we have the Aussie and New Zealand. Anytime after 8 and 9, the market will start to go. Came back to the moving averages. Every one of these candles, here, they're all buy signals. And to the top there is 58, 70 pips. And it just kept going. Almost 100 pips there. Not too bad at all. Okay, let's move on to the pound dollar. Nothing changes. Moving averages looking great. Working its way down. Qualifies for a great way to trade. You must wait for the pullback as close to the goal line as possible. Let's say you pull the trigger here with a 10 pip stop, risking 10 to get 94. Now I wouldn't catch it here as I'm doing my daily trade plan. At this point, I would measure from here to the goal line. And I don't want to be down more than 30 pips. So, but if it doesn't bother me too much, stop's got to go above here. So that's a pretty big stop. May as well just wait till it gets around the goal line, get in. Your stop is going to be to the very first swing pivot high, which is right here. So if you pull the trigger here, 6 pips, 10 pips, even 15 pips, not a big deal. And to the bottom to here is like around 85 pips. After that, the market dies. And eventually, guess what's going to happen? Goes back to the goal line. Moving on to the dollar CAD. Moving averages are crossing, starting to diverge. And this is why you must wait for things to line up. So if you pull the trigger on the goal line here, or this area here, let's say you did it right here. Your stop is, well, let's give it 10 pips. And the most you could have made, well, down to here is 58, down to there is 62. But if I can get 40, 50, or, pips or whatever, especially on this dollar CAD, like I would be okay with that. Okay, so now we finally can get into the futures. They move the most and they pay the most. From back here, everything is starting to line up. They're crossing, they're separated, starting to diverge. This is London. So if you're a London trader, if you get in on this red line, the 40 pip stop, and that London move paid out maximum 650 ticks. If you did one standard lot, that's $6,500. Now I would have to wait. I would just measure from here to the goal line. Well, that's 294. That's quite a bit. So why don't you? I would just wait and wait. Now in real time, I may get in here because I know where my stop is. 84 ticks. Now keep in mind that futures, many times it's going to go a lot more than just 10 or 20 ticks against you. This situation, it went 44. So either there you're going to get in. If you pull the trigger here, your stop is smaller, 24. And it did bottom out at maximum around 540. Times 10, that would be $5,400. Remember, just follow the TZ magic indicator up, and then when it gets to the top, starts to hook, get in. And when it goes all the way down near the bottom, starts to hook with some blue right here, get in on the next two candles. And then, of course, this is around the time of the London close. And then your target is you're aiming for the goal line. Look at how close. That's 240. That's a nice payday of about $2,400. Okay, now we can move on to the DAX 30. Moving averages are braided, waiting for some separation. And on some days, this is exactly what's going to happen. Now, I would have drilled down the lights at 6 in the morning, right here. Then I must wait for the pullback, which happens to be, by the way, on the DAX 30, you include every digit. That's 1830. That's a huge, huge pullback because you times that by $3.75 if you did one standard lot. So you're better off to wait till it comes back into the moving averages area or as close to the goal line as possible. Your stop will be much smaller. And down to the bottom down here is 4,200. And your account will double as soon as you see the number 1334. Look at that. From there to there. Your account's going to double. Imagine if you got down to there. 4,300. Need a calculator. I just use a calculator. 375 times 4,300. That would be 16,000 and change. So this is going to be more. Your $5,000 account will grow to over $20,000 in this one move right here. By the way, anytime the boxes don't just they don't look right, you have to bring the data in properly. Just go to the 30 minutes and then back to the 15. I'll show you 30 minutes, 15, and then everything is looking much better because the boxes is supposed to be where the candles are. Okay, here we go. Dow Jones pays $5 a pip. So for New York, I must wait for the pullback to the goal line area, and that's producing around 650. And so this will be well over $3,000 if you did one standard lot. Okay, let's move on to gold. Gold pays $10 a tick. Moving averages look perfect. Must wait for the pullback, obviously, as that is well over 200 ticks. And then, of course, anywhere within the moving averages or the T area or as close to the goal line as possible. Stop will be like, that's only 22 pips. Risking 22 with a potential of 650. If you did one standard lot, that would be $6,500. Don't ever buy at the top. All you got to do is measure back to the goal line. And would you be happy to be down 460? If the answer is no, well then you can actually trade that. You do get a sell signal down here. Red, red, red. The TZ is going down. So any pullback as high as possible. I used to put a box in here. From here to the top, go across. When price comes back into the box without closing, a blue candle closing above the box. So on this candle, right about here, get in, look at your stop. 34, not too much for gold. And look at the profits, 440. That's $4,400. And again, repeat it over. Hits the goal line after the pullback, that's the magic word. get in. Golden rule, as close to the goal line as possible. Stop is small, well, 32.30. And look at that. That's 300. Times $10, that's $3,000. That move alone. And you can continue trading for another 22. That would be $2,200. And you can continue trading when it comes back to the goal line again. We have the same problem. This blue box is out of whack. 30 minutes, 15 minutes. Now the box lines up. Get in at the goal line. To there is over 200. That's $2,000 before you go to bed. Trading futures is fantastic. Moving right along to NASDAQ. This one is $20 a tick. So London first buy signal, the first cycle is here. So if you get in at the goal line, this London move is around, remove the last two digits, around 270 times 2, that's 540. That would be that would have doubled your account at 250. There it is right there. Doubling your account at 270, that's 5,400. Let's run a check on this one. Wait for the pullback. Around the goal line, you're in. TZ is going up. Buy signals, get in again. And that's producing 233. So that's 46. That would be $4,600 if you did one standard lot. Fantastic again. What can I say? You should be super excited at this point in time, realizing how easy and how much fun it is trading with the Super Sniper trading system. Russell pays $10 a pip. Here we go. There's another one. You can double your account. The magic number is 500. See that number? 69, 690. All you need is 500. If you did one standard lot with a $5,000 account, you're going to have a $10,000 account. You must wait for the pullback. If you drop it down to the 5 minutes, these three candles will be closer to the goal line. Let's say you get in there. Well, you know where your stop is. Around 45. 45 ticks. And all the way down to here. Remember I said the magic number is 500. When it gets around there, you just doubled your account. Down there is 550. That would be $5,500 if you did one standard lot. Moving on to the S&P 500. This one is $5 a tick. Moving averages are crossing, starting to diverge, working its way up. Everything qualifies for a great way to trade. So first entry is around the goal line for London. That's producing, let's see, S&P, that's 830. 830. If it was 800 times 5, that would be $4,000. Nice big candle. This has to be news well, it's a pretty big candle. I assume it's high impact news. And of course, once it touches right here, because that's where your stop goes, and that's like 100. Remember, 10 or 20 ticks. Even though when you pull the trigger, it just went straight up, but you don't know. It can come down to here. Got to be prepared for sometimes that kind of price action. And then in real time, when you see this wick right here, then down at the bottom, after you see a bunch of red candles not going any higher, that's your sell signal down at the bottom. So you're just going to measure from around here to the goal line. Would you be happy with 360? Well, the answer is yes. Take the trade. And of course, that's $3,600. That's 30. That's $6,000. 7,600. 8,600. That's 86. 11. 11,000. Oh my goodness, that's a lot. Anyhow, huge amount. And by the way, the magic number, if you want to double your account, happens to be 500, right around here. When it makes that move right there, if you did one standard lot on a $5,000 account, well, guess, whoops, slight correction here. I was thinking about the Russell. The S&P 500, instead of 500, you need 1,000. Well, look at that. There it is right there on this candle. You would actually double your account. 1,000. 1,000, that's 100. 100 points, actually. Or 1,000 ticks. Moving right along to S&P 500. Nothing changes. The moving averages are going down. Nice gap in between them. TZ is at the top. Qualifies for a great way to trade. Let's say you pull the trigger here. That's where your stop is. 10, 11, around 10. And down to there is around 80. And remember, 80, and it pays $50 a tick. 8 times 5 is 40. That's $4,000. Don't ever sell here. Just measure to the goal line. Would you be happy to be down 25 or 55 ticks? May as well just wait till it gets around here. Your stop is 10 or thereabouts. And it did bottom out here with 70 times 50. That equals to $3,500. Maybe we can squeeze this 30-year bonds. I'm showing this one because many times you have to wait for a push, then the pullback. Now, if you happen to pull the trigger here, 17 stop. If you pull the trigger here, 10, you're risking 10 to get, what was that, 10? To get 140. And if you times that by 5, this is $5. That's $700, that move right there. Anyhow, just looked at the clock. We're at 32 minutes. Time to wrap up this video. Of course, if you have any questions, all you got to do is get in contact with me. And if not, good luck with your trading, and we'll see you in the next video.